Thanks for tuning into the show. I'm Neeraj Shah, and it's a great day for the markets. It's been a strong uptick. And if you look at the Nifty 50 performers, you will see oil and gas is right up there, and banks are not performing badly. I think that's the combination which is working beautifully for the markets to be up about 331 odd points. Frankly, the Nifty contributors will give you the gist. Reliance about 110 points out of this 330. So that's about a third of the market weight being performed by Reliance. And as I look at my screen, 112 points to be precise. And then there is strength in HDFC Bank. So there is no weakness in HDFC Bank, which is a big thing. L&T is participating as well. So I think all of this put together, you would suffice to say it's not a bad day. Just before we get in Abhay Agarwal of Piper Serica, just show the market breadth if we can, and just see how, it'll give a sense of whether the broader markets are performing exactly in line or no. So as you can see, it's a strong breadth, but the Nifty is in a slightly different zone, to be honest, today versus some of the other indices. Abhay Agarwal, founder at Piper Serica, Johnson, with his thoughts as well. Abhay, thanks for taking the time out. I really appreciate this. The whole of last week, Abhay, was marked by FI flows out of certain EMs into China because China was valuable, or the valuations were very, very good, and therefore the belief was that we will stay sideways to marginally lower. And Pat comes today. What do you attribute this to?
I think, Neeraj, first of all, good afternoon to you and the viewers. I think we were seeing a build-up to long-only buying in Indian equity for a week or so, because if you look at the selling pressure that came in from the FPI data, if you cut through if you get into the details, most of these FPIs were what I would say were short-term investors and not really long-term investors. And the kind of moves, Neeraj, we are seeing today in some of the frontline stocks, Reliance, ONGC, Adani, are really, from long-term investors who are making a long-term bet. So I'm not really surprised by the sharp rally in the large caps today. And in fact, I would say that I would expect it to continue for the near future.
Okay. Abhay, so it seems to me from your answer that you believe that short-term gyrations notwithstanding, the interest in India will be visible throughout the year and long-term money will keep on coming in.
Yes, absolutely, Neeraj. And, at the risk of the markets getting overheated at some point of time, I don't think we are close to that point yet, because if you look at India's valuations in line with the growth that is expected, at the worst case, you're looking at a GDP growth of 6.5% to 7%. And assuming that the policy direction remains the same and in fact gets more stronger depending on the election results, I think a lot of foreign long-term capital, and Neeraj, again, I would say it is long-term capital, which is a better part of this situation, that is looking to come into India, will continue to come in. So I don't see any reason that, barring some technical corrections on the way, that the flow of long-term capital into India will abate or will slow down or will reverse in the worst case.
And viewers, just judging by the performance that some of the schemes from various investors, including Abhay's Piper Serica funds, have given, no doubt that some of the long-term capital will be seeking more managers into India. So it's great news for almost everybody in this boat that Abhay Agarwal is in. Abhay, my question to you therefore would be, are you enthused by what's happening, for example, in oil and gas today? Reliance a case in point, ONGC, Oil India, etc. case in point. I can understand that there are PSUs like ONGC, etc., which are trading at single-digit valuations, and therefore at some point of time we'll see buying. But all of them together, including Reliance, doing what it is doing today. Any thoughts on this move?
I think, Neeraj, as you have seen, it gets very difficult to look at one day's price, and a lot of times a single day price movement is driven by technical factors that are not immediately known. But I would still take it at the overall perspective, as you mentioned, the whole oil and gas space, energy space, rather, I would say. So there is clearly an expectation that the that the budget direction, the policy direction will continue to favor energy security. And I think these are the key players. Both PSU and large private players are very critical parts of that energy security for the country. So if there's a clear policy direction for next 5 years, then what you can look at is fairly predictable cash flows. And companies like Reliance will obviously use that to support other businesses and build other businesses. So I think we are in an overall virtuous cycle as far as this space is concerned. So we will have some good days like this. We will have some days which may not be as good. But I think overall direction will be on the positive side.
Very well put there. And Abhay, thank you. I understand you are in a rush, but thank you for taking the time out and speaking to us. Much appreciate this and giving us a sense. That's Abhay Agarwal, viewers, founder at Piper Serica, talking about actually a very practical view that he's given us. By the way, BPCL numbers on your screens are much lower than Bloomberg estimates. The stock, because the space itself is in a bit of a tear, has done okay, but it's slightly off the day's highs. So bear that in mind. But we are speaking of oil and gas, and I think we'll just get in the management of Indraprastha Gas, because it reported a muted third quarter on the back of higher gas sourcing costs. My colleague Alex Mathew spoke to MD Kamal Kishore Chatiwal and began by asking him about the company's current volume trajectory. Listen in.
Our guidance has been that we will be exiting the year at around 9. So we were expecting around 8.6 in this quarter. So there has been a slight 0.1 million drop. And the major reason has been that the festival season in between that has impacted 2-3 days of sales. So that has been the cause. In addition to that, we had to increase the prices of CNG twice during the quarter due to the reduced APM allocations. Although that has not impacted our conversions too much, but this quarter we had 400-500 buses of DIMS, 100 buses of DIMS. They retired during the quarter. So, in fact, we have been able to absorb the loss of those volumes and increased around 2%.
Understood. So are you confident of hitting that 9 MMSC MD mark, or is it going to be challenging to do so?
No, we are confident of exiting at around 9 because of some of the days of the week we are already crossing 9 million. And some of the steps that we have taken, commissioning 50-60 stations, increasing the dispensing points. So that should help us achieve or cross around 9 million comfortably.
Understood. On the cost side, and you mentioned this already, the lower APM gas allocation is proven to be a bit of a pain point. As I understand it, it was around 82% in the quarter gone by, and in quarters past it has been as high as 87-89%, which has forced you to take those price increases. Is that something that is likely to continue going forward?
Yes, as you know, the more and more entities, as more and more GAs get commissioned, and the domestic gas is not increasing at the same pace. So this percentage is going to go down for all the entities, not only for IGL. And although we had made up some of the volumes through HPHT, high pressure, high temperature there. So in this 82%, there is around 4% of those volumes that we had sourced in December. That has somewhat reduced. Otherwise, the APM allocation is at 78%. And going forward, all the entities will have to source gas outside because APM allocation is going to go down. We have taken some of the steps towards sourcing. One of the major area that we feel all CGD entities should work is the CBG segment, because that is the cheapest source, cheaper than even the APM. Because there is no transportation involved, transportation costs are not there. There is some tax advantage there. So keeping that in view, it is 10 to 15% cheaper than APM. So that is one segment that we are working on. We are setting up 10 plants, CBG plants ourselves, as well as 22 other LOI holders. I mean, they will be setting up plants and we will be sourcing gas. So 20-30 CBG plants will be.
Sorry, what is the expectation in terms of the mix on account of this addition, and when will that change, sir?
I think whatever decrease would be there in APM, so we are trying to make up through this CBG volumes. So whatever 1 lakh, 2 lakh volume decrease will be there. So we intend to make up that so that the source of gas, the APM, CBG as well as HPHT, they remain around 80 to 83%.
But when will that come on stream, sir?
So some of them have already started commissioning, but in next 1 year we would see all the plants getting commissioned.
Okay, so then can I assume, Mr. Chatiwal, that there's going to be a little bit of volatility in the margins because of this uncertain cost environment and because of the dependence at this juncture on imported LNG? Is there going to be volatility in margins?
No, there won't be so much volatility, but because we have all the long-term rest, 18%, 20%, whatever is the balance. Right now, we are sourcing around total 31% of our volumes is through RLNG. I mean, what we are talking is only the CNG and domestic PNG. In addition to that, we source for industrial and commercial segment also. So total around 69% is this volumes and 31% we are sourcing. And we have all the long-term contracts. So there is not much volatility in long-term and medium-term contracts. So we have all term contracts. Spot volumes is very, very less or rather negligible. So that's the reason that we see that our margins may not have that much volatility.